we'll start with what is the difference between 2B and 2A. Now, to understand what is the difference between 2A and 2B, we need to first know what is 2B. So if you see 2B is nothing, it is just a statement which is similar to GST2A, which is giving you the details of all the input taxes that you have been paying on your purchases. Now, someone would say that if it's similar to GST2A, then why do we have 2B? So in one line, I would like to say that it is an enhanced, or so to say a modified version of 2A, wherein you get to see some specific details in a particular format, in a particular manner. And also there are some special features, some user-friendly features which have been incorporated in the 2B. So I'll quickly take you through all those special features or the additional features that have been incorporated in 2B, which makes it a little more user-friendly and also facilitates trade while looking into their purchases. The first and foremost feature which we have observed and we got to know is that this statement is a static statement. When I say it's a static statement, it means that it would be available on as it is format on a particular day. So government has decided 12th of every month to display this statement on the portal, and this would have all the data which is punched in by your supplier by 11th, and those who have filed their returns also on 11th. So any supplier who has filed their return on the 11th of the next month, all those details will be available by the 12th of the next month in your GST2B. And this would be available in the form of a PDF or an Excel, but it would not have any data which is filed, the returns for which have been filed after 11th. The other feature about this 2B is that because it's a static return, it's a static data, it is easily, instantly available in a download form. Unlike your 2A, because 2A was having a dynamic data, so every time when you used to go into the portal, the data used to get updated, and then it used to take some time to download the return, the GST2A return. This will not be the case with 2B. It will be readily available for an instant download over the portal. Then, when I say that this particular return has a specific data, by that I mean to say that they have divided the data of your input taxes into eligible and ineligible input tax credit. Now, in order to decide what is ineligible input tax credit, the government has applied only two tests. One test is when the location of supplier and the place of supply of any supply is in the same state, but the recipient whose 2B is being downloaded or whose 2B is being generated is in the another state. All those purchases and the taxes paid on those purchases will be parked in the ineligible category. Another test that has been applied is the non-compliance of the time limit of section 16(4). So for any returns which have been filed after the next financial year in the month of September, after September of the next financial year, those transactions will also be parked in the ineligible category. So for these two tests, while applying these two tests, government has immediately pushed out the data from the total input tax category to an ineligible category, and the remaining remains in the eligible category. In the subsequent slides, we'll see that what all is getting covered in the eligible, and of course in the ineligible we know the parameters that the government has already adopted. Another interesting feature of this return is that they have, which we were not able to see till date in any other return, they have conglomerated with the ICE gate, and they have got the data which is pertaining to the import of goods, and also the goods which are coming from the cross border, and also to include the SEZ supplies, because any supply which is coming from SEZ for the goods is treated as an import under the law. So this amount of these details will also be auto-populated in 2B. So now you'll be able to see even those details which you are paying, the taxes that you're paying on the import of goods, including the SEZ procurements. Some other additional features that this return is carrying with it is, number one, the section-wise advisory. The section-wise advisory is that they have divided the data into some parts, wherein they have bifurcated into the types of documents, whether it is a B2B supply, whether it's a debit note, it's an invoice amendment. So I'll show you how it looks like on the portal in the subsequent slide. So they have bifurcated the sections to ITC available, not available. Within ITC available, the supplies which are coming through invoices, debit notes, amendments, or any other way of transactions that are happening on the portal. Then they'll also, once these Q2B is generated, the emails and SMSs will be sent to the taxpayers. So they get a trigger that for a particular month, GST2B has been generated. They can go onto the portal, look into the data, and for the purpose of their vendor reco or looking into their ITCs for the current month, they can pull out the data from there. Like I said earlier, the data is available in PDF as well as an Excel format. This is an enhancement that has happened on the portal, getting a data in an Excel format of such a huge number. The data is available, which will also have some text search, some filters. They have also given the functionality of supplier-wise data, searching. So if we see, this is how it is going to look on the portal. The tabs will be ITC available. There will be another tab of ITC not available. On the downside of the portal of the screen, you can see the 2B is available in the form of PDF as well as in the form of Excel. When I talked about the section-wise breakup, if you see part A has ITC available, which is as per government's basic test that they have applied. What all ITC will be available. They are further bifurcated into the supplies which is coming from the registered persons, the one which is coming from the reverse charge. So people who are registered, but those whose transactions are taxable under reverse charge, that category is separately shown. Any supply which is coming from ISD. And if you see the fourth serial number very clearly talks about the import of goods, and they will also show you about the SEZ supplies. Then part B talks about the ITC reversal, wherever you're not allowed to take the ITC for various other reasons, the ITC reversals will be done. Similarly, if you see the ITC not available tab, all other ITCs which are coming from registered person, which is coming from ISD, and the transactions which are taxable under reverse charge, all those kinds of bucketings have been done. On the portal, if you see, this is the kind of search filters and the categorization is available. If you see on the extreme left, there's a supplier-wise details which is available. So this is something which helps us to quickly search the details of those suppliers whose ITC we want to check, whether they have reported, whether not reported. You can just punch in the name of your suppliers. You can do the text search, or you can do the filtration. All the filter, etc. is available. You can use this Excel sheet like any other Excel sheet, and you can find the respective details that you wish to look at while you are finalizing your ITCs. Now, once we've understood what is GST2B and what are the special features, let's understand what is the difference between 2B and 2A. So, like in the very beginning, I said that the statement which is coming in the form of 2B is a static statement. This is what differentiates it from GST2A. 2A is a dynamic statement. It keeps on changing on day-to-day basis depending upon the suppliers who are filing their return, because there will be many people who will be filing returns on time-to-time basis. Someone may file on 10, some may file on 11, 12, and so on and so forth. So every time when you go onto the portal and you download the GST2A, the data is getting updated from the back, because there would be some suppliers who would have filed their returns maybe the very same minute when you are trying to download it, or maybe sometime in the morning, afternoon, whichever period of time. But in 2B, they have fixed one cutoff date. Any data which is filed by that date will be posted in the 2B. Anyone who's filing any return or any data after 11th will not be shown in that particular month's 2B, but certainly it will be shown in the next month's 2B. So that's how it becomes a little more easy for any user to download the data and keep it available. The next point of difference follows from here. The timeline that happens while downloading GST2A is because of the real-time updation that keeps on happening at the backend. So the portal takes time to update those details which have come. But in case of 2B, because there is a cutoff date, at the end of the day, when everyone has filed their return, the data will be posted And then there is no need for any updation required on that statement. As regards the source of information is concerned, 2A is having the data which is filed by GSTR 1, 5, GSTR 6, 7, as well as GSTR 8. But in 2B, we have GSTR 1, GSTR 5, and GSTR 6, and the additional data which is coming from the ICE gate, which is pertaining to the import of goods. Now, when coming to the generation of return, GSTR 2A gets auto-populated even if the supplier has submitted their GSTR 1 and they have not filed it. So data starts reflecting in GSTR 2A, while you could see whether it is filed or not filed, that flagging is there. But the data is still there. You can see the person has not filed the return, although he submitted the data on the portal. But on 2B, you will be able to see only those details which have been filed. So anyone who has not filed their returns, those data, the details for those suppliers would not even reflect in 2B. And like I said, in case of GSTR 2A, the import related data was missing, which has been added in 2B, which helps you to reconcile your purchases relating to the import of goods as well. Just to give a very simple example, how the data will flow in GSTR 2B as against GSTR 2A. For example, if you have an invoice which is dated January 2021 and it has to be reported in the return of January 2021, the due date of filing of that return is 11th February and it is filed also on the same date. Then this data is going to flow both in 2A as well as 2B. In the second scenario, if the return, the invoices of the month of January, but the same has been reported in the month of March. March returns due date is 11th April. So in that case, the data will flow in the month of March 2A as well as 2B because it is the month in which you are reflecting the data, irrespective of the date of invoice which is being reported. The third scenario is the differentiator. For the same invoice of the month of January, which has to be reported in the month, which is reported in the month of January, but the return has been filed in the month of April. So assuming someone has missed onto the filing of any return, January details, January month's return, and that return is a delayed file return in the month of April. As far as the 2A is concerned, the data will start reflecting in the January 2A with a flagging that the return has not been filed. But the same data will not be available in 2B in the month of January. It will show only for the month of March once the supplier has filed the returns. So this can cause in, delay of ITC. There are some doubts also, prevailing around this, which we'll discuss in subsequent slides, that if a supplier is filing delayed return, how do I match and, how do I take 2B as a basis? So this was a very layman example, which I thought I'll take in the session so that we know how to differentiate between the auto population of data in 2A and 2B. After understanding the basics and the features of this return, we thought let's also understand what is the advantage of 2B. The first and foremost advantage is that this helps any taxpayer in doing a vendor profiling. Because today, when you see a 2B, you will be able to know that which all vendors have not filed their returns on time. And because of this, it can also cause any delay in ITC, because assuming 2B is taken as a base for taking the ITC, this could hamper your time limit of taking the month in which you take the credit. So it helps you to quickly go back to your vendors and ask them to file their returns on time. It also helps you in identifying the month in which the credit is to be availed. Other point is the summary view of eligible and ineligible ITC, which is available on the return. It gives you a dashboard view to the top management. Anyone who's seeing the first view, they can immediately look at it that, okay, these are my ineligible ITCs which are outrightly denied. And then there is some bucket of eligible ITC, out of which there may be some more exercise which would be required, but at least you know this is the bucket on which you need to work on. Another thing that is happening is that any detail which is coming from 2B will also be populated to 3B. So this will help in, populating your ITC data on the very real-time basis as soon as the 2B is created. It also eliminates the need of downloading the data for the past months or past periods. So for example, if you're doing a reconciliation for a particular month, then in case of 2A, you had to download the entire data, or even for that month, you are downloading it. It takes a lot of time because of the real-time updation that keeps on happening. So this return will eliminate that need, and it will always result in a quick download of the data. And the last one, which is very important, no separate verification from the IceGate is required for the import data, because now the data is directly flowing from IceGate to 2B, and you can always quickly look at the 2B to see the import data. After looking into the details, that the features and the specific categories and the specific tables that 2B is being providing, and the basis of the preparation of 2B, we found there are certain areas which would still need some work from the taxpayers' end. To begin with, the first and foremost thing is that this data does not contain any import of service data or any RCM service data which has been supplied by an unregistered supplier. It will also not have data where my supplier is a GST5, is filing GST5, or if it's a GST6 return, because the due date of those returns will fall after 12th of the next month, and this data will be freezed on the 11th night, and 12th you'll get the data. So the data which has to come from 5 and 6 will be missing in this return. Similarly is the case where someone has delayed their filing of GSTR1. They have not filed it on 11th, maybe they filed it on 13th or 14th, but they filed it 3B on time. So again, those details will not be available in this particular 2B for a month for which we are looking at. This return also does not have any facility of accept, reject, and pending, which was the thought process of GST law, which was introduced when it was introduced, that there would be an interactive return where you could look into the details and accept, reject, or put pending any ITC which is not required to be taken, or you want to reject some data and ask your vendor to make those changes. So anything which has been filed by the vendor will become final and will come on that 2B with no modification or possibilities required at your end. Definitely, you can go back to your vendor and ask them to make the amendments if there is any discrepancy. Where then one very important aspect which has been missed while bucketing between the ineligible and eligible credit is that the government has taken only two criteria and two parameters for deciding the ineligible credit. So just to reiterate, the two parameters are either if your location of supplier and place of supply in same state, and that state is different from the recipient state, then the credit is not allowed. And if any filing which is happening after the September of the next financial year. But there are so many other scenarios where we have ITC reversals. For example, we have 17.5 situations where the ITC credit is not allowed. But this 2B return will take all these transactions into the eligible criteria. So which means we have to do some more self-assessment. We cannot just blindly rely on this return and start taking credits. There will be common credit reversals. There will be reversals which are happening due to non-payment within 180 days. So such scenarios, we'll have to still drill down into the details, do a self-assessment, and then do the reversals on our own. Which means the return is still not in a form of ready to use, which any taxpayer can quickly just take in, punch the data, and start filing. Like your GSTR5 and GSTR6, we also have certain set of taxpayers who file their quarterly returns. So again, if a quarterly return filer is filing their return, even if he has uploaded some data on his GSTR1, till the time the return is filed, it will not flow in my GSTR2B. So again, this return is not taking care of these situations, which we are otherwise also facing in a normal scenario. So even in 2 ways, you get the data while you see there is the data which is uploaded, but while doing matching and all, we look into the details of only those taxpayers who have filed their returns. And of course, we have a provisional credit formula which we use for taking additional 10% credit. But this return is still not taking care of that scenario, which means this return is still not in a form which any taxpayer can just pick and start parking the number. There are a lot of things that has to be done even after getting this return being generated on the portal. And of course, it adds to another set of reconciliation data. As it is, we were doing 2A versus purchase register, we were doing 2A versus 3B. Now, 2B coming into play, there will be another set of data which needs to be reconciled. You might have to look into 2A versus 2B and see what is missing in 2B and how you can, push your vendors to do their filings, do their reportings, and so on and so forth. Now, there is some open issues which we found in the case of GSTR2B. While the government has populated the return, it is available on the portal. From August 2020, from September 12th, they have given the PDF format and the Excel format on the portal. But to our surprise, there is no legal provision and, so to say, no amendment in the Act till date to incorporate this 2B. Therefore, follow the question that whether I should take 2B as basis for any of my calculations. Let's say for 36(4) calculation, till now we have been taking 2A as a basis, whether 2B can be taken or not, whether department can ask me to do the reconciliations, because today department is asking reconciliations or GSTR 2A versus purchase registers versus 3B. So they are looking into all those reconciliation. So department now start asking me reconciliations with 2B also. Also, whether department will take 2B as one of the basis for giving me the ITC refund. So according to us, since 2B does not have any legal backing, it would be taken more as a reference material. For any other calculation, we believe that 2A still holds good as per the law and should be taken as the basis for our 36(4) calculation, whether it is for any other reconciliation. And for that matter, in those cases where your suppliers are filing return after 11, but let's say on 13th or 14th they have filed. So some people in industry, they have put in 15th as a cutoff date to pull down all the ITC and take the ITC basis on that data for filing their returns on the 20th of the subsequent month. So according to us, you can still follow the same practice till the time 2B gets any legal sanctity or a legal backing under the provisions of the law, which is soon to be there. Let's see how government is going to bring it. Till then, we believe that you can continue with the current practice of taking ITC basis GSTR 2A.